What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we continue the 2-day bounce from critical support to critical resistance. Which direction will we see the breakout? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we're up 0.65% and we are currently bouncing all the way back up to the critical resistance, and I still view SPY as a trading range between 390 and 401, which means we are officially back to the top of the trading range. For that reason, it could remain a very choppy market, which means we could continue to bounce between the 50 daily moving average and the support trend line. So do keep that in mind that if you are getting bullish at this level, you will want to wait for a confirmation of a breakout back over this level right around 401. I never suggest buying right at resistance because you have nowhere to set your risk. Your risk level is going to still be all the way down here right around 390, so do keep that in mind if you are trying to buy at these levels. Now, if we do get the bull breakout, you have the resistance trend line just above right around 406 to 407, and if we can break back over the resistance trend line, it will look like the bulls are starting to break out of the downtrend. Now, if we start getting rejected from resistance, watch the support trend line right around 392, and if we break the trend line, you have strong support right around 389 to 390. Below that, the bears take full control over and the downtrend continues to strengthen, which means SPY is very likely going down there to fill the gap at 378. So you are instantly getting more bearish if SPY breaks below 390. Also take note of the volume, as we did see an increase in volume today, so that could be a bullish indication, but I still think you need to wait for that confirmation in the price action to break back over that resistance zone. On the Nasdaq 100 triple Qs, we were up 0.52%, and on the triple Qs, you have a much more bearish look than SPY because we did break down below the support trend line, and we did get a rejection from that resistance today right around 302. So that is definitely not a very bullish look. And if the triple Qs are not looking bullish, it's going to be very difficult for SPY to look bullish if the triple Qs are selling off. So for that reason, on the triple Qs, you need to wait for a breakout back over about 302 to 303, and then getting back over the 50 daily moving average if we do get the breakout, which is going to be right around 306 to 307. So there is plenty of critical resistance just above, and we are still in a downtrend. So do not get bull trapped by a lower high before the next lower low. Wait for confirmation in the price action to confirm that we are breaking out of the downtrend. If you get the rejection here from resistance, you're looking for a retest of support at 296, the previous low right around 293, and below that the bears take full control for the gap close and support level down there at 287, and then we could see bulls buying yet again. So respect the fact that we are in a downtrend of lower highs and lower lows, currently sitting at resistance, and try not to get too bullish while we're at resistance. On the Dow Jones, we were up 0.6%, and the Dow Jones did get a second day in a row closing back over 315. So you can use that as a risk level to take long trades, and the support trend line is just below at 313. If we lose that support, we have the previous daily low at 312, and below that you're looking for the gap fill just below 307. You can get more bullish if we can get back up to about 322 and start to break above the resistance trend line. So as you can tell, it does look like the Dow Jones could have considerable more upside before critical resistance, unless we do get rejected somewhere around 319 to 320. On the Russell 2000 IWM ETF, we were up 0.83%, and we're continuing that strong bounce off the critical support at 178, and we are all the way back up to critical resistance right around 184. If IWM can break above 184, you have resistance trend line up there at 188, and above 188 it will look like a bull breakout. If we get rejected from resistance, you have risk levels you could use right around 183 and 178. And below 178, we have the support trend line right around 176. If we break the support below, it is going to look extremely bearish for a retest of the lows, which means we could be coming all the way back down to 164. On the ARKK ETF, we were up nearly 3% today, and we did get a confirmation breakout follow through off the support at $40, which means we're very likely coming back up to resistance at 43. Keep in mind, this is in a strong bear market below 47, so it is possible we get rejected from 43 and still make an attempt to make another lower low. So you are in a trading range on the ARK ETF between $40 and 43. On a break above 43, look for resistance right around 46 and the gap fill at 47. And you're staying risk off in this ETF until we can get back over that resistance at 47. On the VIX, we were down 4.18%, and the VIX is crushing down below 24, which is a bullish indication because the VIX crushing below 24 increases the probability it's trying to fill the gap down there at 21. The VIX crushing will give the bulls momentum to push higher, so instantly get more risk off if the VIX spikes back over 24, but you can stay bullish while the VIX is crushing down below 24. On Bitcoin, we're currently up 0.5% as Bitcoin is starting to see a very lazy bounce off that support at 19,000. So we're not getting any huge volume buying or impulsive moves off support, but overall we're still holding this level and it is possible we're near the end of crypto winter. Now keep in mind, if you're accumulating at these levels, you need to be willing to hold and willing to invest for at least a few years. But if you're trading, you need to wait to get bullish until we can get back over 21,600 because we are making lower highs and lower lows. If we break the support at 19,000, the next support leg lower will be down there at 17,000. On Amazon stock, we were up 0.26% and Amazon did get a bullish confirmation bounce off that level around 126, and we did get the breakout above the resistance trend line just above 129. If you zoom out and look at the downtrend, we are still making lower highs and lower lows, so we'll need a confirmation of this bounce to continue and take us all the way back up above 136, and we will have a negatively sloping 20 simple moving average at 134. You can stay risk on above 128, but you instantly need to get more risk off if we lose that support zone because we still do have a gap to fill to the downside just below 123. On Microsoft stock, we were up 0.17% as Microsoft is getting a lazy bounce off that support right around 252, but we are still holding above the support trend line. So you want to set your risk on Microsoft right around 255 to 252. If we break 252, that's extremely bearish for a retest of the next leg lower at 242, and the bull breakout will require us to get back over 264 and then back over 268. This is clearly a strong downtrend, so do respect that and do get more risk off if we lose support. On Nvidia, we were up 2.01%, so Nvidia is starting to pivot from that previous low right around 134, but for all we know, this could still just be a dead cat bounce. If you want to go long from here, you need to set your risk at 134 or the next leg lower at 129. And the upside resistance from here is going to be right here at 145, and a break above that, we should close the gap at 150. On Tesla stock, we were up nearly 2% today, and Tesla is confirming the 1 hour double bottom because we did get the price action breakout back over 283. So it does look like we are starting to invalidate the double top on the daily chart. This is obviously bullish price action, so you can take on risk above 283, but you instantly need to get more risk off if we lose that support zone. Below 283, look for a retest of the low at 270, and below 270 will very likely try to fill the gap at 250. The next upside resistance is going to be this 20 simple moving average at 290, and then the previous daily high at 296. On Apple stock, we were down 0.96%, and Apple continues to look weak with the fourth consecutive close below the 50 daily moving average, and we are seeing very weak price action to the downside. But today we did close with a very low momentum doji candle. This does mean there is a possibility the falling knife is slowing down, but we have not yet reached the support level right around 151.5. So do keep that in mind that there is no confirmation of a bounce just yet, and we have not yet reached support. If we do start to bounce from here, that's going to mean there's going to be support right around 154, so that'll be a risk level with resistance at 158, and above 158, look for the gap close at 163. On the financials, we're up 1.76%, and the financials definitely looking bullish today with a very bullish candle and breaking back over the resistance trend line. The industrials were up 0.3%, bouncing back above the 50 daily moving average for the second day in a row, but overall still in a downtrend and still forming lower highs. The healthcare sector had a very strong bounce today, going up 1.74%, and continuing to close above our level here at 126, which is starting to make this look like we are completing out the right shoulder on this inverse head and shoulders pattern, which is obviously a very bullish pattern. The next bull breakout will be back over the 50 daily moving average at 130. The energy sector was up 0.43% today, holding the support trend line and hanging on by a thread, but if this level does break down, it is going to look bearish for a retest of the 50 daily moving average and possibly a gap close at 69. So jumping back over to the S&P 500, without a doubt, this is a very critical test of resistance in the S&P 500. So do keep that in mind if you are buying at these levels, that you are buying at a very strong resistance level and we are still in a downtrend. That doesn't mean we can't break resistance, and that doesn't mean we can't go higher. Just make sure you're managing a risk and you're not just buying blindly while we're still in a downtrend. Also, don't forget I am currently still running the discount for 50% off your first month of bank trade alerts. All you need to do is apply the coupon code Labor Day, all one word, at checkout, and you can claim that 50% off discount for your first month of bank. Bank only trades the ETFs TQQQ and SQQQ, and with the current discount, I think now is the best time for you to try out bank trade alerts if you've been considering it. If you're looking to become a better price action trader, consider consider joining the Stocks Channel Discord server, where you get all of my intraday updates and analysis, and you can trade with the Stocks Channel Discord community. If you're interested in joining Bank or the Stocks Channel Discord, you can find all of those links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.